Good evening, good morning, and good afternoon, wherever you're joining us from today. And welcome to episode 3 of Who Wants to Be FP&A Ninja, brought to you by FP&A Professionals Institute. We would also like to thank our co sponsors, Drivetrain, Pivot Excel, GA Management Consultants, and Blocks. So Asif and I had conceptualized this idea about starting a small quiz competition to see where people are in terms of their understanding of FP&A, and it has got some amazing response. And here you see episode 3 today, and today our focus is on management reporting. As most of you know, FP&A as a function has many key activities. One is budgeting, forecasting, management reporting, planning, analysis. A lot of things are involved in the FP&A function. And what we are trying to do is cover through these quiz episodes, we try and cover some topics and some themes so that we can cast a wider range and give you that broad understanding of what FP&A is. A little bit about Asif and me. My name is Dhaval Parvatikar. I'm a chartered accountant. I'm also a certified general management professional from IIM Ahmedabad. Over the past 15 years, I have served in various CFO and leadership positions in Indian and multinational organizations in India and in the Middle East. And I have my partner with me, Asif. Asif is also a qualified chartered accountant, and he has worked with various sectors in the past, banking, edtech, pharma, and is also the author of the best-selling book all about FP&A. And do watch out his second book, which is going to be released by end of this month. I'll let Asif talk about that book a little bit later. Asif is again a very renowned thought leader when it comes to FP&A on LinkedIn. So together we are the founders of FP&A Professionals Institute. At FP&A Professionals Institute, we have courses at all levels, beginner, intermediate, and advanced levels for FP&A. And not just FP&A, whatever you require in terms of supporting your FP&A career, that's Power BI or any other allied courses, finance, storytelling, business partnering, all of those courses are what you can find on the FP&A Professional Institute's website. So to know more about episode 3 and what we are going to do today in the next 40-45 minutes, over to you, Asif.
Thank you so much, Dhaval, for that wonderful introduction. So let's get into the quiz. Before that, I'll just do some formalities. I'll walk through the objective of the quiz in next 20 seconds. So it is one of the objective to increase awareness about FP&A among the finance community so that we get more talent in FP&A roles. Also helping you understand FP&A concepts. We try to cover these concepts along with the quiz. So that is another objective. Encouraging continuous learning. Some of you may not have gone back to books or a formal learning process after you've completed your graduation or your finance professional certification. So this is a good way to engage in learning along with the networking and interacting with other peers in the same fraternity. So that's the objective of the show. I'll spend maybe 1 minute on the rules. Some of you who are joining us week after week may already know this, but for the people who are new, I'll just quickly walk you through the rules. So when we start the quiz, so we'll do a warm-up round for people who are joining new. So we'll do a warm-up round, and then when we start the main quiz, you will get about 60 seconds to join that, and we will start after 60 seconds. So if you are not able to join that in that 60 seconds, you might lose out on time. So you have to use the link or the QR code that is displayed on the website or on the screen, and then use the game pin to join the quiz. Make sure you enter your full name just in case if there is a restriction on the number of characters that you can use. Use your first name and then use the first few characters of your last name. So ensure that you use your right name. So hoping that you win, and then when your name comes up on the screen, we can call you out with your right names. Just in case if there are any network issues and you drop out, you can join using the same pin. You will see the link and the pin below on the screen throughout while we run the quiz. So you can use that link and rejoin the quiz. However, any questions that you missed because of that, you will not be eligible for any points for missing those questions. try to be on camera so that people know you, and that's the networking part of it. And don't cheat, which is I don't have to say that.
So you have to join this, and you'll get about 60 seconds to join.
Okay, and we'll give you 60 seconds starting from now. So join as early or as soon as you can. Okay, a lot of familiar names and a lot of winners from the past rounds have also joined. So keep an eye on them, and wish you all the best for this episode. Okay, 40 people have already joined. Another 15 seconds and then we will start.
Yeah, I wonder why almost 8 to 10 people are unable to join, or maybe they are just here as an audience.
Okay, should I tune up the volume?
No, tune. No, that's too loud. That's too loud.
Is this okay?
No, lower.
Okay.
Yeah.
Okay. Perfect. So 46 and counting. Maybe last 5 seconds and then we start.
5.
Let's see. Yeah, let's see if we can get to 50.
3,
or
2,
no. Yeah.
1. Let's begin.
Okay. So episode 3 is on management reporting. So welcome to Who Wants to Be an FP&A Ninja, and here is your question 1. What is the purpose of profitability analysis in management reporting? And you have the options on your screen. The right answer is to ensure that every product, branch, service, or client contributes to the company's profit. And we'll hear more about this from Dhaval before we go to the next question. Most of you got this right, so good to see that. Let's see who's on top after the first question. So Sagar and Bharat and Ajit are in the top 3. And over to you, Dhaval.
Yes. So profitability analysis is not something which is done in isolation. It is part of your management reports and commentary. And it is important to ensure that each of the subcomponent in the business, whatever you're tracking, product level, branch level, business unit level, service level, is done on a profitable basis, right? Because it should not happen that one of the business units is loss making and it is being subsidized by a high profit making business unit. Then what is the purpose of running the loss making business unit? Yes, there can be a combination of low to no profits or low to high business unit level profits. Okay, but loss making can be a concern. So the management is always interested in dissecting and getting into the details to understand what is working and what is not working. So that's where profitability analysis helps you.
Amazing. So let's go to the next question on management reporting. What is the purpose of variance analysis in management reporting? Okay, great to see almost everyone got this right. So the right answer is to identify and explain deviations from budget or forecast. So you compare actuals versus budget or actuals versus forecast, and we'll hear more about this in a second. Before that, let's see how the table is looking like. So I think the top 3 are Sagar, Bharat, and Ajit, and there is some changes in the 4th and the 5th position. So let's see what happens. Before that, let's talk about variance analysis.
Right. So budgets, as we know, are represent the plan for the upcoming financial year, and forecast is actuals for some period and plan for the balance period. Like for example, actuals for quarter 1 and a plan for the or estimates for the balance 3 quarters. So the management is always interested to understand whether we are on track. Then if not, then what is the deviation and what is the business reason behind this deviation? That is where variance analysis comes into play, where you do this kind of comparisons plan versus actual, plan versus forecast, current month versus previous month, current quarter versus previous quarter, all of these different type of analysis, and then come up with the business reasons in a management commentary format for the management to take further decisions. So that's what variance analysis is all about.
Thanks, Dhaval, and we'll see more on this in the coming questions. So let's go to question number 3. Which report is most useful for providing frequent updates on financial performance between regular reporting periods? Okay, so the difficulty level is getting slightly more difficult as we go to the next questions. So the right answer is flash report, and we'll see what it is in the next few questions. Before that, let's see let's see what movements happened on the leaderboard. So Sagar is followed by Gaurav, and Vivek is on third position, and very close in terms of the number of points. So let's see
So
what happens.
Asaf,
Yeah,
there
go
is
ahead.
one question in the chat box which says, why are the scores different even if we get the right answer? Uh,
Yes.
you want to just quickly answer that?
Yes. So your points will depend also on the how quick you answer. So if you answer
Fastest finger
faster,
first.
then yeah, if you answer it in the first 2 seconds, you will get more points versus you answer it in the last few seconds. So faster you answer, more points you get is how it works. So let's go to the next question, and before that let's talk about the flash reports. So what flash report does is it bridges the gap between the two month-end reports. The senior management may not want to wait for certain critical business drivers, and they may want to monitor it more frequently, maybe on a weekly or even on a daily basis. So that's what the flash report does. It bridges the gap between the month end reports. Usually it's a short 1 page report, which is only for the key business drivers or the few things that the senior management wants to see every week, or in sometimes it is also on a daily basis. That is on flash reports. With that, let's move on to the next question. So, which of the following is not a part of a balanced scorecard? So, you have your options on the screen. Okay, so very nice chart look, I mean, coming up on your screen. And the right answer is
It's supply
supply
chain.
chain and
Most
management
of them have.
perspective. So the answer is the question was not a part of the balance. I also got confused. So it's not a part of the balance scorecard. So the wrong answer is supply chain management, which is the right answer because it's not a part of the balance scorecard. And all the other three components are usually present in a balance scorecard. Yeah, Dhaval, you were saying something? Yeah,
I
so
was saying,
slightly, yeah,
interestingly, majority of them got it wrong. So we may spend a minute or so to explain this.
yeah. I think it is more on because of the question. They did not read the question properly more than the is what I feel. But yeah, we can talk about it after the quiz. So yeah, let's talk about balance scorecards. Before that, let's look at the yeah. So pay attention to the question. Make sure that you read the question carefully as well. And because of that, a lot of changes. So Vivek is on top, and we have new people in the top three, and hopefully we'll see more people come in, or we'll see some new faces today who will win. Let's see. So a balanced scorecard is a performance management framework, one of the several for performance management techniques that companies can choose to use. And they usually focus on four different parts or four different areas. And the four different areas are the customer related metrics. So here you will see metrics like net promoter score, customer satisfaction rate, customer satisfaction index, all the metrics related to customers or and your clients. The second part it looks at is the internal processes and the internal controls. So focus is also there on how strong are your internal controls and your internal processes of your business, along with innovation and learning. So how well do you do? How much effort do you spend on research and development, and how much you spend on your employees in terms of learning? So that is the third part of the balance scorecard, and the last part obviously is the finance part, where you track your return on investment, return on equity, revenue growth, all the usual financial metrics. So this is how the balance scorecard works. With that, we will move to the next question. What is one of the key purposes of management commentaries and reports? Make sure you read the questions right. Okay, good to see majority of you got this right. So, although some people might feel that it's to summarize last month's performance using Word, that is the first step. And the key objective or the main reason you prepare management commentary is to give business reasons for variances, and that will help in decision making. So let's see the leaderboard, and yeah, there are some shifts. So make sure we are coming closer to the end. So we are at the halfway stage right now. So make sure that you are very quick. If you see the right answer, just go for it. So what should be avoided when creating a good management report? What should be avoided? Okay, good to see. Again, most of you got this right. So all the other three options are some good practices that you should follow. So using simple, plain language, easy to understand. I mean, that is easy to be understood, including breakups, attachments wherever there is necessary, and using consistent terminologies, making sure the approach is consistent. So those are our good practices. Using accounting jargons may not be one of the good practice, and that can be avoided. Okay, so I think Vivek is taking lead on others. So others, uh, come on, let's see if you can get on top on the first position. Om, Anuj, sorry, Anju, Chandrakant, and Gaurav. Good luck, and also others who are maybe on very close to the fifth position, but you don't see them here. So one wrong question and one right question that you answer, and you might be in the top five. Before that, let's take a quick look at the qualities of a good management report. So, usually, management reports are supposed to be decision focused. Shorter the better. One page would be great. So, if you can frame it in one page, or maybe one or two pages would be best, instead of doing maybe 20 different slides. Easy to understand, consistent look and feel. You should not be changing those every week or every month. Once you settle down with the right format, make sure you use the right, I mean, you use the consistent look and feel. And yeah, so I think that's good enough for understanding some of the good qualities of the management report. So now let's move to the next question, and let's see what that is. What is the primary difference between the terms recharges and allocations in management reporting? Okay, so questions are getting tougher. So the right answer is recharge. Recharge is invoice of common cost, invoicing of common cost, while allocation is a adjustment, which is a MIS adjustment, and we'll talk about this in detail. But before that, let's take a look at the leaderboard. Okay, so that's what you see on your screen. And let's go back to Dhaval and understand the difference between recharges and allocations.
Yeah, don't get disheartened. There could be prizes for everybody. So make sure that you stay true till the end and don't give up till the last question. Yes, this was a little bit tough one. So in the corporate world, what happens is that many times there could be certain synergies where synergies, and because of certain synergies, costs are incurred at the headquarter level or at the holding company level, and this cost needs to be apportioned or given to all the group companies or business units. So if there is an actual transfer of cost through invoicing and accounting, then that is called a recharge, where you recharge out a certain cost to some group company. Yeah. If you are using the common cost, for example, let's say HR head salary or the CEO salary, right? So that's a common cost, company wide cost, but you want to just use it to understand the management perspective or the right business unit profitability or the right branch level profitability. So you use it as a management reporting adjustment. In that case, that becomes an allocation. So recharges, actual invoice and accounting and transfer of the costs. Allocations is more of a management reporting adjustment.
Wonderful. So let's go to the next question. Remember, questions are getting tougher. Moment you spot the right answer, go for it. Which cost driver would be most appropriate for allocating office rent expense among the different business units? Okay, so good to see a lot of you got the right answers, most of you. The right answer is square feet. Dhaval, you want to spend maybe
Yeah,
10
sure.
seconds on this?
Sure. So imagine a situation where there is a corporate office and it has multiple business units, right? What is the best way to allocate the rent, which is a common company wide cost, which needs to be allocated to business unit levels to arrive at the right business unit profitability? Area would probably be the best cost driver. So that's why square feet is your right option that you need to select. So a little bit straightforward, but yes, it can be a little tricky sometimes.
Amazing. So let's see the leaderboard, and we are getting very close. I think 7 questions are done, or maybe 8. Let's, yeah, I think 7 are done, and 3 to go. So Om, Vivek, Anju, Chandrakant, Gaurav, let's go to the next question. What is the primary purpose of risk and opportunities tracker? The risk and opportunity tracker, what is the primary purpose? Amazing. So I think most of you know this. We may not want to spend a lot of time on this. So it is to identify potential risk and opportunities affecting future performance. Actually, it's in the name, so fairly straightforward in that way. But let's take a look at the leaderboard, and then we'll go to the. Okay, so no change in the leaderboard. So it's the same 5 people in the top 5. Others who are probably answering the questions right, make sure that you pay attention to the next few questions. And one wrong question and one right question can make a lot of difference here. Before that, let's take a look at the risk and opportunities analysis or the tracker that we talked about. So usually you maintain this in your Excel or your spreadsheet, and you talk about the various risk items, opportunity items, and it's different. I mean, you maintain the tracker so that you are able to identify those items at the cost center level, at the profit center level. Let's take an example. So in this case, the risk is loss of one of the clients, one of the key clients. So that is a risk which is you have the description in the tracker. So the risk is to the possible attrition of client X due to service delivery issues. And what is the team doing on that? So sales and customer team is closely monitoring that and making sure that the customer doesn't go out or doesn't churn. So that is the description. And then you may want to include certain details that can help you in your forecasting and your reporting. So things like, is it a new risk or was it there already known before? What is the probability or what is the possibility of the client going away, or what is that probability of the risk materializing? Was that included in your last forecast or no? What will be the dollar impact if this situation materializes? All of these will be helpful when you update your forecast. If you had already included it, maybe you don't want to double count it. So all these things will help you when you update your forecast. So that was on the risk and opportunity tracker. Let's go to the second last question. What I believe, yes, question number 9, and let's see what that is. So which variance analysis technique involves, I think this is the last question, which variance analysis technique involves repeatedly asking the question why to identify the root cause of an issue? Okay, so a slightly confusing or slightly tricky question, but the right answer or the technique name or name of the technique is the 5I technique. And we'll talk about the 5I technique in detail, but let's first see who is the slide is coming first before the leaderboard in this case. So we'll talk about the 5I technique. So usually when you are doing variance analysis, this is one technique that you can use. This was initially used by company called Toyota. So the founder of Toyota was using this in the early 1990s, or uh, while they were identifying, or when they wanted to identify defects in manufacturing. So the technique is you have to ask the question why multiple times, not necessarily 5 times, but multiple times till the time you get closer to the root cause, or in our cases, the closer we get to the business reason of the variance. So let's take an example. So in this case, the revenues are lower than the budget. That is the situation. And then you ask the question why, and you figure out that is happening because one of the department is underperforming. And that is probably you can see from the data itself. You don't have to ask that to somebody in the company. You can see that from your Excel report or your ERP report that XYZ department is not performing well. Now, second, why you have to go and ask to somebody in XYZ department and ask them why this is happening. And they will give you some reason for that. Maybe that is not the business reason, maybe that is the surface level reason or the intermediate reason. And you will need to ask the question. I mean, you'll have to ask why multiple times, and then you will be able to get to the root cause or the business reason. In this case, the root cause or the business reasons for the revenue being lower is because the demand for that particular product in that XYZ department, one of the products, is not as what they had expected. This will help the business or the senior management make the decision whether they should continue that product, or maybe they should, whatever they need to decide on that particular product. This reason will probably help on making those decisions. Okay, so that was all on the quiz. Any guesses who's going to win? So who's going to be the winner? Any guesses in the chat box? So Naveen is saying Om. What about others? What others feel? You can take your own name also if you feel okay. Om or Vivek is what the majority think. Let's see what happened in the last question. Okay, so on number 3 or the third position is Nanaswarao. Congratulations. Second spot is Om, and the first spot is Vivek. So congratulations, all three of you. And we have runners up Sachin and Anju, if I did read that right.
That's right.
Okay, so let me stop sharing my screen. Let me figure out how to do that. Yes.
Congratulations to all the winners.